Hey, good afternoon. US dollar, Canadian dollar, 15-minute chart. We're going to go through and we're going to do the progression. All right, let me throw my moving average joint. We're prices what? Below all three moving averages. So that's a good sign that we're what? Continuously in a downtrend. So I'm going to be looking for what? Sell setups based off of this. Okay, let me put this on a bigger screen for you guys. All right. So I also want to what measure from here to here, and I can have my what Fibonacci retracement levels, and I could play a short-term trade setup based off these particular levels. And what do we have? We have a nice setup. So on this, I wasn't looking for anything going long, even though we could have took something up here, but no. For one, and I'll pull this off in a few minutes. But hold on, let me finish this right quick. All right, so look, we got this, and we got price to do what? Break the 23%, and then price came back above 23%, and we're gonna find our entry back up here, and where we're gonna take that trade to. We're gonna take between the 61 and the 78% level. We're gonna take this off, and this played out beautifully. We got the cross, it alerted us, come back across, and then we ride it back down. And this was a successful trade setup to get back in here about 17, 18 something pips. So that's a good trade setup. Now, let me show you something of why you always want to look left as well too. So for one, we're above, a bit well below all the moving averages, but you got to look at areas where price reacted. And this would have been an area of potential what? Resistance, because this was support at one point. This broke the support line. Now it's become new resistance. Hey, we're back up here to resistance. So I was not looking for anything to go up here to the upside. We're not playing that game. Look, we're going to go with the trend. We'll stay down. Hey, this is a nice area to look for a rejection. All right, then here's another trade setup without using the Fibonacci. What we would do is let's do a bar replay back, and I will show you how I would have played this. Okay, so we got that, and this is what this would look like. We would come into the market. We already have that level. So what we would have did was come down and put a level here, and I actually would have moved this up because I'm looking now. My bias is the downside, so I don't care if it breaks and come up here. I was really looking for this. So if price comes down here and engulfs this bar, I'm going to put my stop loss above here. I'm going to take the trade down, and that's exactly what I did. All right, so we're in the trade. Targets hit. We're good to go. If you wanted to, you can move your stop loss into profit for safety, and we're good to go. So look, we just keep these ideas and things simple, guys. Just keep trading very, 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 very simple. Don't overcomplicate things. Continue to practice over the simplest things, and you'll be amazed at what it can do. Look, stop trying to build your account in one day. This thing may take years, 2 years, 3 years. It doesn't matter. What matters is that you're making progress and you're not trying to live in your head and you're not trying to be perfect. You need to get out here. You need to make trades. You need to do it. Preferably, make trades with a real account, but use less capital. Use 10%. Use a 10-cent lot size, 20-cent lot size. Stop trying to go out here and go big, and then when it doesn't work, it blows your account. You do not have the right account size in the beginning to take on some of these bigger trades, okay? Because you remember, we always trade with the notion that if this goes wrong, I already know what I'm going to lose. So you always take a trade based off that you're 100% going to lose, and that is how you know whether or not your lot sizes or your risk reward ratios are in the correct proportion. If you feel like, whoa, if my stop loss get hit and I'm going to take a $500 loss, and I don't want to take a $500 loss, well, it's two things. I'm not either going to take that trade or I'm going to reduce my exposure. And say, hey, and now I got to get my lot sizes down to a point to where if I do take a L, maybe I'm only willing to lose $100. You get it? All right, so I hope that helps and it makes sense. But yeah, guys, keep it simple, follow the rules and some of the things we do, and you got it. All right, y'all have a nice one.